If you have a group health plan in your business and you're offering health insurance to your employees and it's costing you tons of money on taxes, I'm here to tell you, you can stop offering group health plan to your employees and instead opt in for an alternative method that IRS allows you. So you will still get a tax deduction, your employees will still get a health insurance benefit tax-free, and you get a deduction, and that's exactly what we're going to cover in this video. Ready? Let's go. Hey, welcome to my whiteboard tax strategy. My name is Boris Musheyev. I'm a CPA and a certified tax strategist. Every Tuesday, I release a tax strategy video here on YouTube for you, the business owner. By watching this video, my goal is for you to start paying less in taxes right away. So go ahead, subscribe to my channel, like it, share it, and even comment below. I appreciate you. Now let's get started. All right, awesome. Welcome to another tax strategy. Now, today we're going to talk about what's called the QSEHRA, Qualified Small Employer Health Reimbursement Arrangement. Now, why is this really important? You see, back when CARES Act was introduced by President Obama, also known as Obamacare, everybody was required to have health insurance, and the business owner was also required to offer health insurance. Now, there was a little exception to the rule. If you had less than 50 employees, you were considered a small business. Therefore, you did not have to offer health insurance to your employees. But that was kind of backfiring them, because employees at that time needed to have health insurance because it was a requirement. Today, it's not a requirement anymore, but the rules state, so we're going to talk about them. Now, what happened is that employees wanted health insurance. When they came to an employer, he can't afford, you, the business owner, can't necessarily always afford a group health plan from the marketplace for employers. That stuff is really expensive. When I was looking at the prices for my own business, I was like, damn, that's expensive. So I went out and I implemented what's called a QSEHRA. Now, any employee that wants a health insurance for themselves, what we say is that why don't we follow the QSEHRA law? The QSEHRA exception basically says, you know what? If you're a small employer, the business owner, and your employees want health insurance, you don't necessarily have to offer them a group plan. What you can do is say, you know what? Why don't you go get essential coverage, the minimum coverage that you need, and I can reimburse you. Now, here's the kicker. CARES Act said you can't reimburse your employees without having a QSEHRA. If the IRS finds out that you are reimbursing your employees without QSEHRA, that's $100 a day penalty per employee. Crazy. Think about it, $100 a day penalty per employer. So they came up with something that's called QSEHRA. Now, a lot of business owners don't know about this. Their accountant is not really talking about them, let alone they don't even know how to implement this tax strategy. Now, what we're going to do in this video, first of all, we're going to talk about QSEHRA, but I am going to give you a tax strategy, exactly how to implement it in your business. So make sure you stay till the end to get all the ticks and trips and be able to implement it within 30 days. Now, that's really the QSEHRA. Now, why QSEHRA is so good? Because it's so flexible, right? You as a business owner have control of the cost. Now, the laws of a QSEHRA is that if your employee wants to take a single coverage and they want the single coverage, you get to reimburse them up to $5,850. Now, these numbers are for 2023. That means you as an employer get to decide how much you get to reimburse them, which is up to $5,850. Now, if it's a family coverage, you can reimburse them up to $11,800. Now, if you alternatively look at group health plans, in most states and in most cases, they're way more expensive than this. And the truth is, on a marketplace, the insurances may be cheaper individually for an employee. They can get their own insurance, and you can follow the QSEHRA rule by just reimbursing them. IRS totally allows it. It's a deduction for you, and it's a tax-free benefit for your employees. Now, really, let's talk about how it works. And like I said, stay till the end so I can give you exact tax strategy for your business right after this break. Hey, Boris Musheyev here. Sorry for the quick interruption. 5 seconds, I promise. I want to make sure you get your free PDF, 7 write-offs every S Corporation business owner must know. The link to this free PDF is in the description below. That's it. Thank you so much. Continue watching. Awesome. Welcome back. Let's talk about how this tax strategy works. Now, first of all, you cannot be offering group health plan to that same employee. That includes vision and dental. So you cannot be like, you know what, why don't I offer you vision and dental through a group health plan and the rest I'm going to reimburse you through QSEHRA. You're not allowed to do that, and it's going to jeopardize your tax strategy. So the second thing is that you want to set up a plan document, okay? And basically it says, hey, I am reimbursing you for health insurance, and you have to set up limits. The maximum limit that you as a business owner can use is $5,850 for a single coverage and $11,800 for a family coverage. Again, it is up to you to make that limit, but it cannot exceed $5,850. It also has to be minimum essential coverage. Now, what happens is that your employee can go out to a marketplace, a shop on a marketplace, okay, and get an insurance for themselves. And those marketplaces already have that as a minimum essential coverage. They get that minimum essential coverage, and what happens is that they submit a reimbursement expense to you, okay? They submit it to you, and then you reimburse them tax-free. And again, you have those limits picked out in your plan document. Now, what's really important is that you've got to work with the tax advisor to get this right. Now, I'm sharing this tax strategy for you on this video so that you, the business owner, know enough, right? Know enough to be able, hey, I can do this. I can save money on group health plan. I can't tell you how much our clients have saved by switching from group health plan, because what happens is that sometimes even only 2 out of 10 employees want to go for a group health plan, for insurance, now you need to get a group health plan. And that becomes really, really, really expensive. 8 employees, for example, may not need a health insurance, but 2 will. And how much money it's costing you, the business owner? A lot. So you want to strategize with a tax advisor. Hey, if we do QSEHRA, these are the numbers. This is how much we're going to pay in insurance. How much are we going to save on money as a deduction? How much will our employees save on taxes, right? And how much is it really going to affect our cash flow compared to group health plan? So really, really important. And honestly, it's super, super, super easy to set up. We're going to talk about that in a tax strategy. It's super easy to follow. No major compliance, no extra filings, no, like really, this is one of those things that a lot of accountants do not know. And the reason a lot of accountants do not know is because they're tax preparers. Tax preparers do not know a tax strategy. A tax advisor knows a tax strategy. If you want to pay less in taxes, you've got to start using tax strategies from a tax advisor. I can't stress this enough, how much business owners are overpaying in taxes by not doing things properly in their business. QSEHRA, Qualified Self-Employer Health Reimbursement Arrangement is one of those strategies. All right, let's really talk about how does this tax strategy work and what can you do in your business within the next 30 days so that you can start implementing this tax strategy right after this break. Hey, thank you so much for watching the video. Very quickly, if you don't mind, I want to ask for your help. I need your help. I want other business owners just like you that will benefit from a video like this to catch this video. The best thing that you can do for me, please either like the video or even say something in the comments, because that really helps the YouTube algorithm when it sees a lot of engagement to push the video to other business owners just like yourself, or better yet, subscribe to the channel would be much appreciated. Thank you again. Now let's get back to the tax strategy. All right, welcome back. Let's talk about a tax strategy. Now, in order for this to work, you obviously need to have a plan document. You can't just send a Slack message to your employee, be like, hey, by the way, we're offering a health insurance benefit, blah, blah, blah. It's called QSEHRA. It doesn't work that way. You got to set up what's called a plan document. A plan document is basically says, hey, from now on, we're offering a health reimbursement arrangement. For you to qualify for health insurance, you need to go get your own health insurance, and you need to submit the reimbursement for that health insurance. And we have the limits, right? We have the limits for that health insurance. Everything needs to be in a plan document, and then your employee gets to sign it and you get to sign it. The beautiful thing is that you don't have to file it anywhere. You just keep it with your documents. Now that you have established a plan document, now it doesn't mean that all employees now have to participate. No, it is completely optional, okay? Some employees could already have a spouse that is getting a health insurance benefit from their job. So if they don't want to participate, that is totally okay. Okay, now that's a plan document. Now they gotta give you proof before you're reimbursing them. Do not adapt a habit of just reimbursing them on a monthly basis. Oh, Jane gets health insurance, $500 a month, so I'm just going to reimburse automatically $500 a month. No, you need proof, you need documentation. Do not get in a habit of reimbursing them until they submit that proof to you. Now, what's important is that I'm releasing this video before October, okay? You have, for existing employees, October 2nd is a deadline to give them a plan document that says, hey, we're now going to do this starting January, okay? You have to notify your employees 3 months, 90 days, so to speak, before this health insurance is implemented. Now, your question might be, well, Boris, what if I hire somebody in November? Does that mean we ran out of time? No. Actually, the plan document that you'll put together, you'll put in that plan document that, we're complying by the 90-day rule to give existing employees notice before the year starts, 90 days before, which is October 2nd, unless it's a new employee. Okay, the new employee gets the notice right away, and that's okay. So if you have somebody starting to work for you in February, well, guess what? This will still work. Okay, the 90-day rule is only for existing employees to start next year. New employees can start within 3 months after they start the employment, however you want to structure that. Now, what's really, really important as well is that when you do offer a QSEHRA, you have to report it on a W-2. I can't tell you with how many accountants I've spoken and have actually educated on how to report such a tax strategy, simple tax strategy that helps you, the business owner, to save thousands of dollars on taxes, okay? Thousands of dollars, and a simple tax strategy that other accountants are not really using. So what you want to do is report it on a W-2. It would go on a box 12 of a W-2 and with the code FF. Again, I'm sharing this with you not so that you can go into your payroll software, register for payroll software and try to do it on your own. You're a business owner. You need time to run the business and make money. It's your tax advisor's job to save you money on taxes. My job is to educate you on a tax strategies. If you're working with a tax preparer, you are overpaying in taxes. Stop it. You need to start working with a tax advisor. Start doing tax planning. Start being proactive. Stop waiting until the year is over. Okay? So to be surprised by another tax bill. Now, back to our W-2 reporting. What happens is that you report on a W-2 box 12 code FF. And what's funny is that you have to report, if you gave somebody single coverage, you have to report the maximum amount. So let's say you reimbursed employee Joe $3,000 for the course of the year. Box 12 code FF would not include $3,000. It would just include $5,850. Just would include these limits, even though you reimburse them less. Don't ask me why. Sometimes IRS does some weird stuff, okay? We just have to comply by it. The last thing you have to do is actually file what's called PCORI fee. It's like patient care something research initiative. I don't know. It drives me nuts. But anyways, it's $3 per employee. Your tax advisor should be able to do that for you. Now, again, like I said before, if you're working with a tax preparer, you are overpaying in taxes. There's a lot of tax strategies within our tax code that actually help you save money on taxes, not make you pay more. You know who makes you pay more on taxes? That is your accountant. What you need is a tax advisor that understands the tax code, interprets the tax code so that you can save money on taxes. Thank you so much. Until the next time.